안녕하세요. 이번 시간에는 뉴욕 BCA리서치 수석전략가 분과 만나서 인터뷰를 하도록 하겠습니다. 간단한 소개 부탁드리도록 하겠습니다.
Sure. My name is Doug Petawa, and I am our Chief U.S. Investment Strategist. What I do, and what we do generally at BCA, I analyze the United States economy for insight into what's going to happen in financial markets. And indeed, that's what we do at BCA. We analyze the world's major economies, not for the economies themselves, but to get an idea as to what is to come in financial markets.
Today is CPI. 오늘 CPI 발표 났는데 어떻게 보시는지 좀 간단하게 소감 좀 부탁드립니다. 말씀해 주세요.
Broadly, it was in line with what we expected. We think it continues to confirm the trend that we have disinflation, that not that prices are falling, but that they are rising at a slower rate. And we expect that's going to continue across the rest of the year until, come December, 3.5% year-over-year inflation as in the CPI. That seems about right to us. Now, we don't expect every single month you're going to see it neatly decline. There'll be a sine wave around that general trend, but we do expect that the trend is for inflation to continue to decelerate. Today confirmed that. When we looked into the details, we were more comforted by what we saw in what was in the headlines, that a huge surge in used car prices from March to April really accounted for a good bit of the move in the core inflation rate, inflation accepting food and energy. And we know that used car prices in more timely data than is in the CPI index indicate that used car prices fell a lot from April to March. So we do expect you're going to see that in subsequent reports. So this 4.4% increase month over month in the price of used cars, you multiply that by 12, you get something over 50% year over year. That's a one-off event, so that as that subsides, you will continue to see this trend of goods costing less and less as we work out globally the supply chain issues that emerged in the wake of the pandemic.
그러면 올해 하반기 이제 증시 상황은 어떻게 보시는지, 이제 경기 침체를 보시는지 이것도 궁금합니다.
So we actually expect in the U.S. investment strategy team at BCA, and this is not a view that's shared by everyone at BCA, but we expect that equities are going to continue to rally, and that the S&P 500 we expect that it'll go as high as 4,500. We then expect that as the recession nears, that the S&P 500 will fall to around the levels where it was at the end of last year, around 3,600. Now, we'll see if the S&P 500 breaks through those levels or if 3,600 proves to be a place where it supports the stock market. But nonetheless, we are expecting after a peak sometime in the late summer or early fall that you will see the S&P 500 embark on a decline of somewhere around 20%, from 4,500 to 3,600. So if you ask me to put it in the second half, I think we'll see the S&P 500 lower on December 31st than we see it on June 30th. Okay, but that's within the context of we expect a rally into the mid 4,000s, so close to another 10% gain for the S&P 500 before it declines 20%.
경기 침체를 예상하시는 건지 또 여쭤보고 싶네요.
Absolutely. I believe a recession is inevitable. It will occur. My difference with the consensus view among investors is that I don't think the recession begins until sometime in the first half of next year. So sometime between January 1st and June 30th of 2024. That differs from the prevailing view that a recession has either already started or that it is going to start by the end of the second quarter, by June 30th. So I am suggesting the recession is going to be 2, 3, 4 months later than the consensus expects. And that's why I think there is room for the stock market to rally in the interim. Because I think that the U.S. economy can grow 1.25%, 1.5% adjusted for inflation in 2023. So that call this 1 to 1.5%. Investors expect the consensus 0 to 0.5%. And so there's a gap here. Even though 1 to 1.5% real economic growth is very weak growth, it's still a full percentage point better than what's expected. So we expect, as the economy continues to surprise to the upside, that does, and that will bring S&P 500 earnings surprising to the upside along with it, that this expectation will slowly lift until there's no gap anymore between what we expect and what the market expects. And indeed, I would expect by late this summer, you're going to see the expectation from the market get above our expectation. That as the recession does not arrive on schedule, that we're going to begin to see articles saying, the Fed did it. It really was a soft landing. It turns out it is possible to raise interest rates by 5 percentage points in a very short period of time, 15 months from March to May. That, wow, they did it. It hadn't happened before, but the Fed pulled it off. No recession, soft landing. I don't think that's going to happen. And once people begin to expect that we won't have any recession at all and that there will be a soft landing, that's when equities are ripe to decline. That's when I think they commence their decline from this 4,500 back to revisit the 3,600 lows that we saw at the end of 2022.
페드가 금리를 계속 올리고 있는데 이게 좀 문제가 생길 수도 있다고 보시는지 알고 싶습니다.
Quite possibly. It is our view at BCA that the Fed is now finished raising interest rates, that this 5 to 5.25% target represents the peak in the Fed funds rate for this cycle. Now, I should add, we don't expect the Fed to cut rates in 2023, which the money markets clearly do expect. They're pricing in somewhere between 2 25 basis point cuts and 3 25 basis point cuts before the year ends. We think we're going to finish at 5 to 5.25%. As far as problems, if it did continue to hike, it would increase the pressure on the banking system because the banks have, following the financial crisis, following Basel III, global legislation or global regulations, following the Dodd-Frank Act in the United States, the United States regulation, that the banks have devoted more balance sheet to owning treasury securities and agency mortgage-backed securities. Those are the Fannie Mae and Freddie Mac securities where the performance of the borrower is guaranteed by the government. So these securities have no credit risk if indeed the United States government has no credit risk. However, especially in the case of the mortgage-backed securities, they tend to be very long-term. And they have very, very low interest rates because just about every homeowner in the United States refinanced his or her mortgage such that he or she has a 30-year fixed-rate mortgage on which they owe 2.5%, 2.75%, maybe 3% interest. Well, now that the funds rate is 5 to 5.25%, right, the value of those securities has declined. And if the Fed were to hike from 5 to 5.25% to 5.25%, 5.5%, 5.5%, 5.75%, maybe even 5.75% to 6%, the value of those mortgage-backed securities would decline even more. And that would put the banks under greater pressure and potentially feed more deposit flight and therefore lead to more bank failures. So I do think the Fed is cognizant of the fact that higher interest rates would stress the banking system more and that it would take clear evidence that inflation is actually moving in the wrong direction, that it's not continuing to decelerate as I suggested, but that it's starting to back up again. I think that is the only thing that could compel the Fed to hike rates more, despite what that might do to vulnerable banks.
상업용 부동산 리스크가 지금 굉장히 화두인데 이 문제에 대해서 어떻게 생각하시는지 한번 여쭤보겠습니다.
Sure. Well, we're meeting in an office building in Midtown New York City, and we're within BCA's offices. BCA moved in August of 2022. This new office space is anywhere from 25 to 30% of the space we had been renting 9 blocks down 6th Avenue before. So BCA taking much less space in an office building than it used to. I was in Seattle a few weeks ago meeting with a client, and there was one person in the conference room with us, 54 colleagues watching via Microsoft Teams or Zoom, but they were doing it remotely. And I said, well, this means now, going to be an afternoon in Seattle, 2% of the people in this office that were going to be looking for lunch are going to be looking, right? Because 55 people would have needed lunch in 2019 on this date, but only one needs it now. So I think that illustrates in central business districts where there are offices, you have way less demand for the office space, and additionally, way less business at the street level retail establishments that served those workers, right? So you've got less demand for lunch, you've got a whole lot less demand for dry cleaning, for shoe shining, etc., haircuts, so that the problem in commercial real estate, I believe, is that demand has fallen for office space because people are not going to the office 5 days a week like they used to. Transit systems in the United States, mass transit systems, subway ridership still is nowhere near where it was in New York City of what it was in 2019. So it does mean within commercial real estate, the office niche is going to get squeezed, and the value of office buildings has declined and presumably will continue to decline. Offices are 1/6 to 1/5 of all commercial real estate. So one cannot look at all of commercial real estate and all of the loans backing commercial real estate and say that all of them are going to go bust, or a sizable percentage of them are going to go bust. Generally, with the larger banks, about 1/6 of their commercial real estate portfolio is related to offices. And then the larger banks account for very little of the commercial real estate lending, at least that's retained on their own balance sheets. The top 24 banks in the United States hold 20% of the banking system's commercial mortgages, commercial real estate loans. So that means that that other 80% is broadly diffused across a lot of smaller banks. And those smaller banks are not by themselves, they can't create a systemic event. Really, in the United States, there are only 4 commercial banks: JP Morgan Chase, Bank of America, Citibank, and Wells Fargo, that are by themselves systemic. If something happens to them, it will impact the entire banking system. But we've just lost 3 of the 20 largest banks in the United States, and it's impossible to see any impact on the United States economy. Right? Silicon Valley Bank, Signature Bank New York, and First Republic, these were among the 20 largest banks in America by asset size and also by market cap. And yet, we didn't need them. So I think that the fears that have cropped up around this reduced demand for office buildings, and then some ripple out to retail spaces around those office buildings, has been overdone. It is absolutely not 2008 all over again, not even close. So while it's a concern, while surely some smaller banks that are particularly exposed to office mortgages are going to go under, that is not in any way a threat to the United States banking system, and it is really a modest pressure at the margin for the U.S. economy.
그럼 시장에서 지금 가장 우려할 만한 악재는 어떤 게 있는지 한번 물어봐 줄 수 있을까요? 네.
So our view that a recession isn't going to happen until 2024 is predicated on the idea that American households have the capacity and the willingness to spend at a rate that will push the start date of the recession date out into 2024. So my biggest worry is that households would lose that willingness. And when it comes to the capacity, American households in the aggregate, we estimate, accumulated between $2.3 and $2.4 trillion of excess savings. Savings they would not have had if we hadn't had a once-in-a-century pandemic. Okay, and that was a result of very large transfers from Washington, D.C. to individual households, and then the fact that we couldn't spend like we wanted to spend during the pandemic. We wouldn't have been sitting in this room together, right? There were no sports events that were played in front of a crowd. There were no concerts. There were no movies. People weren't traveling. So that combination of less spending and increased income from the government led to $2.3 to $2.4 trillion of excess savings. We estimate that households now have about $1.3 trillion left, and that they're spending that down somewhere around $50 billion a month. Well, 1,300 billion divided by 50 billion is 26 months. Now, we absolutely do not believe it's going to be 2 more years before a recession. We think there will be a recession in 2024. But we believe that households have the means to keep growing their spending at about 2% a year after inflation. And that since consumption is 2/3 of the United States economy, that's going to, deliver this something better than 1% inflation-adjusted GDP growth. And that puts the margin off into next year. So what I worry about, the first worry is that the savings rate goes up, indicating that households are less willing to consume. The second worry is a breakout in inflation and or inflation expectations that forces the Fed to say, wait a minute.
그러면 내년 증시는 어떻게 보시는지 여쭤보도록 하겠습니다.
In 2024, and my best guess is it begins sometime in the first half of the year, sometime between New Year's and June 30th. I think that the stock market will decline. Again, I expect it'll get to 3,600. Now, if the recession is milder than the average recession as we expect, then maybe 3,600 holds. The S&P 500 goes no lower than 3,600. If the recession is something more than the average recession, then we will break through 3,600, maybe 3,200 or 3,000 is where the S&P 500 will bottom. Exactly when all that happens across 2024, I don't know. But the broad strokes are, again, we expect to rally to 4,500 sometime in the summer or early fall of this year before descending to 3,600. And then, the timing, I think, depends on when that recession begins, when it ends. Typically, towards the end of a recession is a fantastic time to invest because equities bottom a little bit before the end of the recession, and then they do their best as we are coming out of a recession and into a new expansion. That's when the rate of gains is particularly steep. I don't necessarily think December 31st, 2024 is going to be the low point for the S&P 500 in 2024, but we do think we're at 4,500, then 3,600, and possibly below 3,600, and that bottom occurs sometime around, let's say, the middle of 2024.
그럼 이럴 때는 우리가 어떤 업종을 좀 잘 지켜보는 게 좋을지 여쭤보도록 하겠습니다.
So again, it's my answer changes within the very near time frame while we're going up to 4,500 and then going down to 3,600. I think in the near term, on our way to 4,500, that investors should do well in the late cyclical sectors, energy, industrials, materials, the sectors that tend to thrive as we get to the very end of an expansion. And I think that on that run to 4,500, I would expect the defenses will underperform. Consumer staples, utilities, and healthcare. Those three sectors, I do think it's very interesting, those most defensive sectors, while the banking concerns were at their peak from when Silicon Valley Bank failed until the end of March. Those three sectors failed to outperform the S&P 500. They very, very narrowly underperformed, which suggests to me that, gee, there was a lot of concern. Volatility was very high. The VIX, sort of thought of as the fear gauge in the stock market, that was very high. And yet the stocks that should benefit the most from fear really couldn't do anything in a relative sense. That suggests to me that investors who anticipate that the recession has already begun or that it's going to begin any day now have already loaded up on the defensives, on consumer staples, utilities, and healthcare, and that there really isn't anyone left to buy them. So that I do expect they will continue to underperform if my scenario that stocks are going to rally pretty sharply comes to pass, because those stocks will be left behind in a rally.
IRA에 대해서 여쭤볼 건데, IRA가 이제 글로벌 그리고 이제 아메리카에 어떤 영향을 주었는지 여쭤보도록 하겠습니다.
We'll see. There are a lot of promises in there. We'll see what comes to pass. But it is, I think, what we have seen already is that there's an incentive for companies to manufacture in the United States, especially high-tech things like semiconductors. So Taiwan Semiconductor announced that it's going to build a massive facility in the States. Intel, which is a United States company, is building a massive one. I forget which one's in Ohio and which one's in Arizona, but that's where the two are occurring. Presumably, then, we're going to see perhaps more investment within the United States, capital investment, than we otherwise would have. I don't expect that other economies will stand by and just let that happen. So one would expect that Europe, will begin to pass these sorts of laws, and that, in the end, maybe the U.S. doesn't derive that much of a benefit from it. But, in the near term, we have seen promises of more capital investment in the United States to manufacture semiconductors. There are also a bunch of provisions in there to encourage green energy, and that that may well prove to be a boon for alternative energy sources. Ultimately, our commodity strategists within BCA think that owning base metals, copper, nickel, zinc, they will ultimately be the biggest beneficiaries of an attempt to reduce emissions around the world. They say, look, to meet these ambitious carbon reduction targets, we need way more base metals above the ground, way more copper and nickel above the ground than we have now. And so they expect prices for those metals will surge, and they really like the idea of owning stocks that are involved, the miners, stocks that are involved in getting those metals above the ground. And the Inflation Reduction Act is just a further tailwind for those stocks.
미중 갈등이 심해지고 있는데 차이나 아메리칸 이제 앞으로 이게 어떻게 경제에 영향을 끼칠지 궁금합니다.
Well, we certainly think that it's going to continue to get worse, that unfortunately this isn't just going to stop. We've had sort of globally one major power ever since the fall of the Berlin Wall, and that's been the United States. But our geopolitical strategists think those days are over, that we're going from a unipolar world with one global hegemon to at least a bipolar world with the U.S. and China, or perhaps even a multipolar world where there are other, very sizable players. Anything that reduces trade presumably sort of acts as a tax on the global economy, right? So if there are going to be continued increased tensions between the U.S. and China, and if we're going to, beyond that, sort of create these blocks where you've got a U.S.-friendly bloc and a China-friendly bloc, much as we had during the Cold War, when we had a U.S.-friendly bloc, sort of NATO bloc, and a Warsaw Pact bloc. And there's very little trade or any interaction between the two sides. If that were to happen, as we go further with this conflict, then it is going to weigh on global economic output to some degree. Some countries could be real winners if they can kind of flirt with each side. I think it's clear that Western Europe will be with the United States. Canada, Australia, the UK will be with the United States. But countries in Latin America, they may be up for grabs, and therefore they may be able to negotiate in a way that they can get things from each side. So ultimately, the investment winners may be countries with resources that are attractive to both sides that can extract some concessions from both sides. And kind of back to the base metals theme, maybe that means Latin American economies outside of Mexico, where I think of Mexico as an oil play and a play on the United States because there's some trade links. But what about Chile, Peru, Brazil, that have copper, that have iron ore, that both sides want? Maybe they can negotiate aid from both sides and do real well without ever actually lining up with one bloc or the other.
그리고 좀 위안화가 이제 기축통화에 도전을 하고 있는데 이렇게 되면 달러의 입지가 흔들리지 않을지 여쭤봐 주세요.
I think the United States can pursue solid economic policies. Ultimately, they teach you at university that exchange rates are defined by real expected growth rates in an economy, so that independent of anything that occurs with yuan, and independent of anything that occurs in China, if the U.S. is going to grow at a slower inflation-adjusted rate relative to other countries, relative to the economies of other currencies, then the U.S. dollar will weaken. If the U.S. can grow faster, then the U.S. dollar will strengthen. The U.S. dollar does occupy sort of a unique place in the global currency system in that it is the world's reserve currency. It's where everyone else goes for either a safe currency in which to transact or a currency in which you can transact everywhere else. It's hard to see that the yuan could displace the U.S. dollar if policymakers in China insist on being able to manage interest rates and the exchange rate themselves. Right? You can't, then it's not a very useful currency if the currency is not allowed to float.
Right.
So I don't see the CNY, the Chinese yuan, as a viable alternative to the US dollar as the global reserve currency. Now, these things don't last forever. Rome didn't last forever. The British Empire didn't last forever. The US dollar will not necessarily always be the world's reserve currency, but it is very hard to see 10, 20 years out how that will change. And I don't think the CNY is the currency that will displace the dollar.
유럽 증시가 이제 하이레벨, 그러니까 최고점을 찍고 있는데 왜 지금 유럽 증시는 사상 최고치를 달리고 있는지 여쭤보도록 하겠습니다.
European growth has been good at the company level. We've seen faster growth in European companies' sales per share. We've seen faster growth in their earnings per share than we have in the United States. So the S&P 500 is up about 8% year to date, adjusted for currency, so placed on a US dollar basis. A lot of European bourses are up between 15 and 20% year to date. So we think, again, it is the greater growth to this point, the greater expected growth going forward, and the fact that European stocks may have started from a lower starting point because there was fear that there would be a devastating recession in Europe if the winter were cold enough that Europe's supply of natural gas in the winter would be insufficient, and that therefore governments would have to tell businesses, you can only operate from 4, 6, 8 hours a day. You can only operate from noon till 4 p.m. or 10 a.m. to 4 p.m. That was a very real fear because presumably a government is going to choose, if there isn't enough to heat homes and schools and factories, that governments are going to prioritize homes and schools so that people don't die and sacrifice some economic growth to protect the populace. Well, it turns out Europe had a very mild winter, and then additionally, European countries were able to stockpile a great deal of natural gas before the winter came. So I do think some of the snapback in European equities resulted from the fact that they began from a more depressed level that priced in at least some probability that European countries would have to ration supplies of natural gas, thereby badly crimping economic output. It turned out that didn't happen.
그럼 이제 우크라이나 러시아 이제 전쟁이 끝나면 유럽 증시는 더 올라갈 수 있다 보시는지 여쭤보도록 하겠습니다.
We'll see. It depends how much the Ukraine-Russian conflict pulled stocks down relative to where they would have been otherwise. And of course, I should mention that when we're talking about why European stocks have outperformed and the whole natural gas issue, it emerged, the problems with providing enough energy to Europe, or Europe having enough energy, resulted from Western Europe refusing to purchase any more energy from Russia, which had been its essential energy supplier. Right? So it was that conflict that led Europe to say no more Russian natural gas, very little Russian crude oil. That was where the potential shortages were coming from.
네, 그러면은 이제 향후에 어느 국가가 매력적일지 한번 좀 생각하시는 게 있는지 여쭤보도록 하겠습니다. 좀 긴 관점, 롱텀에서.
In the long term, I really favor emerging markets. They have a smaller base from which to grow. Presumably these economies haven't fully tapped all of the resources, in particular the resources of their populations that are growing at a much more rapid rate than populations in the developed world. And then additionally, as I mentioned, the really favorable outlook we hold at BCA for base metals in the future, emerging market economies that have these base metals resources might be positioned to outgrow everything else in the world, especially if they can play tension between the United States and China to their advantage.
한국 증시에 대해서는 어떻게 생각하시는지 여쭤보겠습니다.
This is a stock market where one company is truly dominant. Right? Apple's about 5% of market cap in the United States. That's only about a quarter of Samsung's impact, or Samsung Electronics impact on the Kospi. So, much of an outlook for Korean equities, I think, turns on what are the things that Samsung does, and that really gets back to kind of technology hardware as a big driver, and Hynix, very big semiconductor manufacturer, and then finally, Korea's a big chip builder. So it all comes back to me for manufacturing. What is the outlook for manufacturing? And if the outlook for manufacturing globally is favorable, then all else equal, the outlook for the Korean economy and for Korean equities also ought to be favorable. And there's a big dose of technology in there as well because of Samsung's large semiconductor arm. And so ultimately, I think what it comes down to for Korean equities is, again, tech and manufacturing. And if those things are going to thrive, then the Korean economy and Korean equities ought to do very well. If those things are going to struggle, then perhaps the Korean economy and Korean equities underperform the rest of the world.
그리고 거꾸로 한국 사람들은 아메리칸 빅테크 그리고 테슬라 사랑이 이제 집중적인데 이거를 봤을 때 투자로 봤을 때 좀 분산을 할 필요가 있는지 아니면 그냥 괜찮은 건지 여쭤보고 싶습니다.
So I think Tesla is immune from this one, but the other big tech in the States, I do expect they're going to face a regulatory headwind that they haven't faced in the past. as any entity that handles large quantities of consumer data is likely to face a lot more restriction than it previously has. The mega cap tech companies in the United States have already encountered this in Europe. I would say Europe is 18 to 24 months ahead of the United States in this sort of regulatory protection around consumer data. I've never been a tech analyst, but it does seem to me that the mega cap tech companies in the United States, their stocks aren't priced for a bit of a regulatory headwind, which could translate into, which should translate into profit margin pressures. Now, I'm just making these numbers up, but I think this is a good general guide. Look, if these companies have 30% profit margins, perhaps they're going to have 24, 25, 26% profit margins in the future once we fully account for the new regulatory pressures. And if the stocks aren't priced for that, then they're going to underperform the rest of the US stock market. If they're going to underperform, then I would expect that United States equities will underperform global equities ex the United States. The MSCI All Country World Index, the ACWI, I would expect the US will underperform ACWI ex US if those mega cap tech companies underperform. Because the tremendous outperformance for the United States, we're talking 70 percentage points over a decade, like 4.5% a year in annualized returns. That's how much the US has outperformed the ACWI ex-US since 2012. But that was driven by these mega cap tech companies. And the mega cap tech companies have a disproportionate sway over the overall US market, similar to Samsung's sway on the Kospi. So that I would expect, as we look out 3 to 5 years, in the intermediate term, perhaps even in the long term, out 5 to 10 years, that these mega cap tech companies in the United States are going to underperform. And therefore, it would make sense to rebalance some allocations away from them if something like artificial intelligence can't boost them so much that that allows them to overcome the regulatory drag. And of course, if those mega cap tech companies could be the artificial intelligence winners, which I don't think is necessarily guaranteed.
그리고 마지막으로 이제 한국 투자자들에게 조언 부탁드립니다.
I think that this advice applies to everyone in the near term. Watch out for inflation. Watch out for what that forces central banks to do. Right? The at least short-term positive story I'm telling, if we have much tighter central bank policy, that story won't apply. Right? And so for my positive story to come to pass, we need inflation to continue to decelerate. And I think that is something worldwide that's affecting stock markets, that's affecting central bank decisions, that's going to affect economic growth everywhere around the world. So that is, keep a close eye on inflation. If it doesn't continue to move in the right direction, then it's probably a time to take less risk as an investor.
예, 오늘 또 긴 시간 동안 많이 또 대화해 주셔서 정말 감사합니다. 좀 전달 부탁드리겠습니다.
Thank you very much for your
Thank you.
advice.
감사합니다.
Thank you very much. 네, 그래서 BCA리서치 수석전략가분께서 말씀해 주셨는데 정말 와닿는 얘기들 많이 들었고, 그리고 이제 한국에서 들었었던 뷰와 다르게 이제 글로벌 뷰에 대해서 우리가 들어볼 수 있는 시간이었습니다. 정말 또 함께 해주셔서 정말 감사합니다. Thank you.
Thank you.